I think after we are done with the political issues, the second group of people that we should go for are these companies that are selling bodas on Lipa Pole Pole mode. Now, that is the weird conversation that I want us to have today. But because those are people in business and it's a case of willing buyer, willing seller, I don't want to go in the line of looking at the kind of business they are doing. But I want us to see the financial viability of that being from the side of a buyer. So today I'm basically talking to that young man who is thinking of that option of going for a boda via that means of Lipa Pole Pole. Otherwise, if you are coming across this channel for the first time, welcome to Finance Focus with Andrew, where we limit our conversations to engagements that enhance our financial literacy, which is very key when it comes to making our personal financial decisions. So let's dive direct into the topic that I wish we get to discuss today. And I want us to see the cost of that line of getting a boda on the Lipa Pole Pole mode. So according to this advert that you see here, the current price of the bike that is being advertised, current price is 158,900. Of course, that is Kenya shillings. That is the current price if you are paying in cash. But how much do you get to pay if you go for the Lipa Pole Pole mode? So you can see that they are talking about a deposit of 30,000. Then there is the daily payment. Where you get to pay 450 for 18 months. So it's a deposit of 30,000 and you get to pay 450 shillings for 18 months. Now, I know the figures look okay as far as we are concerned. Your mentality will have it that you only need 30,000 to get a bike and you will be able to pay the 450,000 on a daily basis. But this is where it gets crazy. So let's see how much you will have to pay for the bike by the end of the 18 months. So we have the deposit of 30,000. Then we add the daily contribution, where you are making a contribution of 450. So times 30 days, times 18 months. So if you do that, that comes to 450 times 30 times 18 plus 30,000. That should give you a total of 273,000. Now you can see how crazy it is. By the end of the day, you have paid 273,000 for a bike with a value of 158,900. So of course it is a loan that you are being given. So it is fair if you get to calculate the interest rate that you get to pay. So the interest rate that you get to pay is the 273,000. You subtract the value, the cash price value. So that gives you 114,100. So this is the amount that you will pay in excess of the value of the bike, 114,100. Let's try to bring the figures down by calculating the interest rates in terms of a percentage. So it's like you are paying an interest of 114,000 for a loan of 158,900. So of course times 100, so that it can be a percentage. That comes to around 71.8%. Now, this is for 18 months. So let's convert that to annual rate because I want us to compare to other lending institutions. So I want us to compare this 18-month rate to an annual interest rate, because if I say that we are being given a loan at 71%, you will say that that is for 18 months. So I want us to convert this rate into an annual rate, and I hope my maths is right. 273 minus 158 900, 114 100 divided by 158 900. So that is right. So what we do is we get to divide 71.8%, divide this by 12, divide this by 18, multiply by 12. 71.8 divided by 18 times 12. That comes to 47.86% per annum. So this is the rate at which these guys are lending you at 47.86%. Crazy, I know. Now, what is the lending rate in our financial institution? You hear CBK talking about a CBR rate of 10.75. So when they are doing a lending of, when the CBK gives a base rate of 10.75, even if the bank was to add its margin of rate, maybe 5% or 3%, you find that the bank should be lending at around 15.75%. So this is crazy because this is 3 times the cost of this setup is 3 times the setup of the bank. But why go for this option? Now, let's see, and in fact, we have not talked about Saccos that will give you loans at around 12%, 13%. Now, what other options are there available for our young people other than this kind of setup that is not that does not make sense financially if you sit down and check at the numbers? So, what other options do we have? Number 1, you can opt for Sacco financing. Sacco financing, you know, majority of the Saccos will lend you 3% and 3 times of the amount that you have. So you can postpone the process of buying a bike until you have an amount in the bank, in the Sacco, that will enable you to get 3 times the loan, so that you can purchase the bike that you want on a cash price. Then your debt obligation remains between you and your Sacco, but not between you and these guys, because this is crazy. But you can also consider bank financing. It is the same as the Sacco, because we have seen that the bank will give you money at a rate of around 15.75%, but here it's about 47.86%. But I know the challenge is that for you to be loaned by the bank, of course you need to have a statement. You have to have banked with them for quite some time. The same with the Sacco, you need to have some deposits, and majority of the young people does not have that patience. You know, we are in the instant photo generation where we want something to happen in an instant manner, and that is what is killing us. So you can avoid this nonsense by having some little patience. The other thing that I get to think about, why do you need a new bike? And you are willing to pay for 273,000 for a new bike. I believe a second-hand bike, we are talking a comfortable second-hand bike yenye that will still serve the purpose. Maybe around 80,000. Let's give it 80,000. 80,000, I'm sure you can be able to get a comfortable bike. Now that I'm talking from a point of information. So you can also make it more financially viable by reducing your ambitions from starting with a new bike and spending this crazy amount and thinking of how you can get a deposit of 30,000 in a Sacco and get a loan of 80,000 and acquire a second-hand bike and get to pay the loan with your Sacco comfortably. Because I don't really think why you need a new bike for a start. You know, the only challenge is that nowadays boda riding is turning from being more of an economic activity to a lifestyle. You want to have the most modern bike in your gang. You want to have the bike that is shining in your gang. But the question is, at what cost will you have that? You can consider starting with a second-hand bike, especially those people who do town service. I don't really see the need why you need a brand new bike that is strong. You know, I can understand those guys coming from the villages where we have hills, and sometimes a second-hand bike may do you a disservice. But when it comes to town service, I believe a second-hand bike, if well packaged, will still serve the purpose. But get to think about it. Yes, you want to have a new bike, but at what cost? The issue is not having the bike, but at what cost? So before you think of going for that option ya Lipa na pole pole, try to figure out other available options that can be there for you, because for sure, alone at 47.86%, it's crazy. You will pay for one bike an amount that is equal to pay for two bikes, to buy two bikes. And by the time you are finishing to pay this loan after the 18 months, the value of that motorbike will be close to nothing. So just get to think about it before you go for this crazy option. I'm sure there are other options that are there that are financially viable than this. So what do you think?